Okay, I put an order in here at 1302, and we'll just see. I'm going to pause it and we'll see if we get filled here shortly. Okay, we've just gotten filled at 1302. We have sold 4 contracts. I'm sorry, yeah, 1302, and our protective buy stop, you can see there, is at 1303.50. So we're risking 6 ticks per contract on this trade. You can see our first objective is at 1301.25, so we just go for 3 ticks on the first objective and 6 ticks on the second objective, which is why you see the T2 or second target to buy 1 contract back, or 1/4 of our position at 1300 even 0.5. We do have a buy limit on the final 1/4 of our position at 1298. So the market, by the way, this is on Thursday, February the 24th, 2011, and this is taking place at approximately just before 12 noon Eastern time. So the market has been, you can actually see 3 red down arrows there, which means we've actually got an indication to sell in 3 different positions. So when we get that, we will combine them together when they are as close together as these 3 are. You can see that there's 1 to be sold. The top one there is an entry at 1302.50. The next one down is at 1302 even. The next one down is at 1301.75. So we'll really just take the average of them, and we will exit the trade, or I'm sorry, we will enter the trade at 1302. So you're just basically taking an average of those 3, and we'll see what we get here. We usually don't like to hold a trade more than about 10 minutes. Now, if it hasn't moved in our direction at all after 10 minutes, we will exit the trade. Basically a scratch trade. Maybe make a couple ticks, lose a couple ticks. We have a couple of other trading protocols along with that as far as the management of the trade goes. And what we will look at is if we feel that the immediate structure going into that trade is favorable, along with our intraday and intraday bias, we will give it a little bit more time, up to 15 minutes, to see if that first objective will get hit. If it's more of a nimble kind of situation, in other words, let's say we're going against the intraday bias, but we do have a nice looking setup and we have entered a trade, then we will manage the trade in sort of a tighter fashion, in other words, in a nimble fashion, so that we really expect to see the first target reached within 5 minutes, and if it's not, we'll exit the trade. So, in other words, we just don't give it as much time when the trade is really not that much in our favor. So, we're just going to give this one, obviously we've got 3 trades that have set up and gotten us into this short trade. So, the market, obviously, it has been pretty bearish here the past couple days. It's sold off. This is the end of February, and we basically, in the past couple of days, Tuesday, Wednesday, and Thursday of this week, well, in particular Tuesday and Wednesday, the market has sold off and basically erased all of the gains that were made the prior 3 weeks of the month. So we really didn't switch to an intraday bias down until about midway through yesterday, or a third of the day through, something like that. And we still had the 1308 area as a key area of likely resistance. The market today, it has rallied up a little bit above that. I think it reached 1310. Yeah, 1310 even is actually the high today. So that 1308 was a good barrier for us, thinking that if the market could continue to hold below it, that would maintain the intraday bearish directional bias, and which is another reason that I think makes this a good trade is that it's with that intraday bias. As you can see, we do have a red filter, which is at the band at the bottom of the chart. You can see that it's red. And so we've got intraday and intraday bias in our direction, and now we have a setup, not just one but actually three in this case, suggesting that the market over the next 15-20 minutes at least should be heading lower. So it's just basically been hovering around our position. It has moved against us a point. It did reach up to 1303. Of course, 1303.50 is our stop, so that's why we were not stopped out. So hopefully the market can attract some selling in here, which is what we're anticipating. So the market can come down and hopefully reach our at least our first couple of objectives here. So, but if it doesn't, even now if we don't get stopped out in 10 minutes, but we have not reached our first objective, we may give this trade a few more minutes. So that part is somewhat subjective. That we like to work with our traders over time, so that they can develop, as best market feel as they can as to what they're really going to do once you've been in the trade for about 10 minutes. So. But we've been in this trade now for maybe six. Okay, here we are, starting to finally get a little bit of selling in here, and it has come down and reached our first objective, 1301.25. So hopefully we'll get filled on here shortly, and then we can. Okay, there we are. Very good. We've been filled there. So we'll go ahead and reduce our stop now to just 3 ticks. So should the market bounce up the equivalent amount of what we just made, then be no worse than a break-even trade, i.e. making the same amount on those first 2 contracts that we were just filled on. And if the market were to then now bounce up to 1302.75, we would lose the equivalent amount. So in essence, a break-even trade, less the cost of commission. But hopefully we're going to come down. We've just come within a tick of our second objective. So the market is looking good here, as we were anticipating, in that it would have a bit of a sell-off here. So hopefully we can get filled on that second objective shortly. Once we do get filled on the second objective, our stop is then, actually once the market hits our second objective, we will move our protective buy stop to our entry price, in other words, to break even. So even if we don't if it does hit 1300.50, but doesn't fill us on this target, our stop will adjust to break even, so we will at least lock in the profit on the first 2 objectives, on the first 2 targets, and have break even on the other 2 should that occur. Otherwise, hopefully it'll drop down here. It's getting very close to it, and hopefully we'll get filled on our second objective here. We're short at 1302. Our second objective is to make 6 ticks, which is 1300.50. So hopefully we can get filled on this shortly. Okay, there we are. It did hit our second objective, not quite yet filled on it, but you can see as soon as it did hit the stop move to break even, and there we go. Okay, good. We've now been filled on that second objective, so another 6 ticks gain. So 3 ticks on each of the first 2 contracts and 6 on the third one. So far a total of 12 ticks, and well, it do have a buy limit down there at 12.98. Should the market have a nice swift run down there, we will make a 4-point profit just on that final contract. But you can see here that we have a selling bar, the high of it there at 1301.25. So I've moved the protective buy stop to 1301.75. It only locks in a tick of profit, but what we have found is that whenever a selling paint bar forms when we're in a short trade, that it's best to go ahead and place our protective buy stop a couple of ticks above the high of that selling paint bar. and that's why we have our stop adjusted right here to 1301.75, 2 ticks above the high of that blue bar. Okay, now this next bar here obviously is going to be a blue bar, and now these two are very close together, just basically the same range. One is I guess its high is 2 ticks lower and its low is 1 tick lower. So I really should move the stop here to 2 ticks above the high of that lower or second, that bar right there. Um, I'm a little reluctant to do that because it's right at the high of the previous blue bar. But from a very, okay, we were hit on that. Okay, so that's really it for the trade. Just want to point out the three. There's the three trades. I'm just going to highlight the three trades here. The indication, the three of them there, and we combine them together to go ahead and get short on that trade. So nice profit on that trade. So thanks for taking the time to watch, and we'll see you again next time from eminidaytrader.com.